Hello guys, welcome back to my channel. Here I am with another question on depreciation. In this very question, the different point is that first of all we need to prepare the depreciation account also. Secondly, here the payment of the asset is not done at one stretch, rather it has been done in the installments. So let's see in this very case how we have to prepare firstly the machinery account and then we will come to the depreciation account for the understanding purposes, as it is not asked in your syllabus. But you should understand that how depreciation is charged and where it is taken to the year end. So let's see. On 1st of January 2021, D Limited purchased from R Limited. First of all, we are preparing the machinery account in the books of D Limited, because who purchased the asset? D Limited. Who will use the asset? That is D Limited. So who will depreciate the asset? That is D Limited, right? So in the books of the D Limited, we are preparing machinery account. The machinery account have debit side with date, particulars and amount, date, particulars and amount on the credit side also. So he says that on 1st of January 2021, the asset was purchased for a valuation of rupees 4 lakh, but the sum was payable as follows. The point is this, that on the date of the purchase we have prepaid a value of rupees 1 lakh, that is the down payment we made with 1 lakh. Rest of the payment is to be done in the future, so they become the installment, right? So here the asset value is 4 lakh. When you will buy any asset, whether the payment is to be made into the future, you will bring that particular asset as a whole soul with yourself. What I meant to say over here, like if I give you example, I purchased a dining set, right? Dining set with 6 chairs, right? So if the payment is to be made in the next month, but the furniture would be fully delivered to me with the 6 chair set, complete table would be delivered to me at the moment I have made the down payment. They won't give me the 2 chairs you take now, 3 afterwards when you make the payment of the second installment or third installment. It's not going to be like that. So on the date of the purchase, we made the payment of 1 lakh. But we got the asset with the full value of rupees 4 lakh. So the 3 lakh rupees would be presented with creditors for machinery account. You will write over here that we have purchased the asset with 1 lakh down payment, that goes with the bank amount, and the rest is to go on the future date. So they would be presented with the creditors for machinery. So now asset is purchased. This is my working note space. So working note for the asset. Asset was purchased on 1st of January 2021. So here the asset is purchased on this particular date and the depreciation is to be provided at the rate 20% per annum on written down value method. So here the asset which was of value 4 lakh was purchased on 1st of January 2021 is to be used till 31st March 2021 only, right? Because here from 1st of January, Jan, Feb, March, the same year would remain here 21. So in this very case, the 4 lakh rupees that is to be depreciated for 10% per annum, that would be 20% per annum, that would be 80,000 rupees per annum depreciation is there as per 20% rate of depreciation. But as my months of depreciation are only 3, so this 80,000 rupees would be reduced to 3 months out of the 12 months. How many we got here? 3 for the usage. So what would be the charge for depreciation? That would be 20,000 rupees. So how much depreciation is to be charged as on 31st March 2021? That is rupees 20,000, right? So here in this case, the balance carried down as on 31st March 2021, balance carried down is out of 4 lakh, we have used the asset of value 20,000. So what is the left value of the asset? That is rupees 3 lakh and 80,000, right? So this is the way the asset is shown first year. Now, this balance would be brought forward as on 1st of April 2021. March ending year, April ending year would be same, 21 only. So 21 to balance brought down is with rupees 3,80,000 here. Now he says that this part of machinery, half of power plant was replaced with a new one for rupees 3 lakh as on 1st of July 2022. So that means from 1st April 2021 to 31st March 2022 it was used again. Then from 1st April 2022 to 31st March to which date he is telling, that is 1st of July, or you can say first 7 month 2022 he sold the asset on this particular date. So we have to calculate the depreciation. So what would be the amount of depreciation, that is for this particular year we have to consider from 1st April 2021 to 31st March 2022. The depreciation is to be charged on which method, that is written down value method. So what is the value brought down on this very date, that is 3,80,000 rupees. On 3,80,000 when 20% rate was given as a depreciation, then per annum depreciation we got with rupees 76,000 here, right? So what would be the depreciation at the year end here by depreciation account with rupees 76,000 as on 31st March 2022, right? So year have ended, depreciation have charged for the full year. What would be the balance of the machinery out of 3,80,000 total? When we deducted 76,000, what is the leftover balance of the machinery? That is 3,04,000 rupees. So this balance is to be brought down as on 1st of April 2022. Year ending 31st March 22, year starting 1st April 2022. To balance brought down is with rupees 3,04,000. Now in this particular year, he says this machinery was used from 1st April to 1st of July. After that, half of the machinery was replaced. So what we have to do, we have to do the point of the half of the machinery that was sold here. So let's calculate what was the half of machinery. The machinery was of rupees 3,04,000 as on 1st of April 2022. As per the question, the half. What is the half here? 1,52,000. 1,52,000. Right? The half of the machinery was sold on which very date? 31st of, no, it is 1st of July 2022. Right? So 1st of July 2022, that means how many months we use the asset? That is for April, May and June. On 1st July we sold, so we will not take the depreciation for first date of July. So the depreciation charge here would be for 3 months. So now this half value of asset 1,52,000 at which depreciation was to be provided for usages 20% was depreciated for only 3 months because it was sold after 3 months. So the depreciation on rupees 1,52,000 is for 3 months rupees 7,600 here. Okay. Now what you have to do? You have to on this very date have to write the date of sale. Date of sale was 1st of July 2022. First you will write the depreciation on the sold part of the asset. Second, you will write the sale value of the asset. Third, you will find out the profit or loss on the asset. If it is a loss, it would remain here, or otherwise if it is a profit, then it would be taken to this very side, profit and loss account, profit if on the sale. But we have to find out the same, right? So in this case, the asset which had a leftover value of 1,52,000 as on 1st of April 2022 was used for 3 months and reduced with the depreciation of 7600. So 1,52,000 used for 3 months. 3-month depreciation is rupees 7600. What was the remaining value of asset? The remaining value of asset was 1,44,400. But it was replaced with the new one, where old one was valued at 1,40,000 rupees. So if its sale value is rupees 1,40,000, which is less than the remaining value of the asset, so what is the loss on the sale of asset? That is rupees 4,400 in this very case. So we will write over here that depreciation charge for 3 months 7600. It was sold for 1,40,000 and loss on the sale was rupees 4,400. So there was no profit to be taken on this very side. Now this machinery is completely finished from the books of accounts, because we have sold it, so it is finished from the books of account. But on the same date we have purchased a new one for rupees 3 lakh. So 1st of July 2022 we purchased a new machinery with the payment of rupees 3 lakh here. Now the depreciation is to be provided on this very asset. How it is to be done? Now we are left with the two machines, that is half of the first machine and the second we purchased, that is as on the half of the, not on the half, that is on the 1st of July. So at the end of the year, the one asset that is left was 1,52,000 half, and one asset which we purchased, that is for rupees 3 lakh. Now this half asset was used for full year. So depreciation charge on this asset should also be for full year, and full year depreciation rate was 20%. So now 20% of this for the full year gives you the value of rupees 30,400 by depreciation account as on 31st March 2023 now. The depreciation charge on first one is 30,400, right? And on the second asset, which was used from 1st of July till 31st of March 2023. So July, August, September, October, November, December, Jan, Feb, March, it gives you a total of 9 months, right? So 3 lakh rupees depreciated at the rate of 20%, full year depreciation is 60,000, but we need it for 9 months out of total 12 months. So the depreciation becomes rupees 45,000 here. So depreciation on second asset is of rupees 45,000. The total of the depreciation is 75,400 on two assets. Now, what is the balance of the assets left? The balance of the asset left is, now you can calculate it from your account also, making a total over here and then making the deductions for your credit balances here. But another credit balances means from 6,04,000 you can deduct all the values which are on the credit side of the machinery account. But if I don't want to go along that and I want to calculate it immediate values from the 3 lakh rupees, this 3 lakh total value, what was the depreciation charge? 45. So what is the value of the asset left? 2,55,000 here. Now, second machinery, we sold the half of the machinery for 1,52,000, right? And what is the leftover value of machinery? That is 1,52,000. It was depreciated for rupees 30,400. So out of 1,52,000 less is 30,400. What value I got is that is 1,21,600. 1,21,600. So what is the balance left on this very date? That is 3,76,600 for both the machineries put together. So here my machinery account is summed up. Now for the case that you should understand how depreciation account is taken, we are going to do the same for the clearance point of view. First of all, depreciation account is your expense account. It is a non-cash expense because depreciation is not paid to anybody else. It's a non-cash expense because we are not making payment for depreciation to anyone else. So for depreciation account, when we pass the journal for depreciation, which account is debited? Depreciation to machinery or plant, which is the case as here in this question, the depreciation was charged on the plant. So we write over here to plant account. Now depreciation charged in the first year was rupees 20,000. Firstly, you focus on how the depreciation is taken. The depreciation account debit to plant account with rupees 20,000, and this depreciation at the year end always is transferred to profit and loss account because all the expenses of the business are transferred to which account? Profit and loss account. Till now you are making a journal when we pay the salary account debit to cash account, right? But another version of the chapter goes along that whatever expenses any of the firm is making should be charged to which account? P&L account, right? So here depreciation account debit to plant account, and then profit and loss account debit to depreciation account. Which year it was? That was 31st March 2021. Here we charge the depreciation. Year ends on the same date. Same date we will take the total of the depreciation to which account? That is your depreciation plant and machinery, P&L account, right? Profit and loss account. So here the second year depreciation was 76,000 rupees. So 76,000 depreciation which was charged on the plant as on 31st March 2022 would be taken to the profit and loss account the same year by profit and loss account with rupees 76,000 only. Account is closed here for the year. Now the third case is there where the depreciation is taken on the two dates. First, 1st of July 2022 and then 31st March 2023. So two plant account and two plant account. In the both case, the depreciation would be taken from where? Plant account. The first depreciation we take for rupees 7,600 and then next value we take for 75,400. So 7,600 for the first date. Next date total is 5,400. So what is the total that we are getting over here? That is 83,000 rupees. This is 76. And yes, so it is 83,000 total account. This 83,000 total on the year end would be charged to which account? That is profit and loss account. So with rupees 83,000. Although this account is not asked from you in your syllabus, but you should know that first of all depreciation is a non-cash expense. That's why we are not writing here depreciation to cash. Rather, we are writing depreciation to plant because it is charged, not paid. Second point is that where the depreciation account, how the depreciation account is written off or where it is transferred to, it is transferred to profit and loss account at the year end with the total amount of the depreciation charged during the year. So this is for the day where the installment system of payment was given, where the depreciation account was to be prepared and how it is to be charged and where it is to be transferred. So thanks for the day. Accountitude, like, share and subscribe. Keep scoring.